Good evening, ladies and gents. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Tuesday, May the 28th, 2013, and here is today's After the Bell market summary brought to you guys by wallstreettrading.com. Before I get into the video here, if you have not been to the website yet, go check it out. There's a lot of free education, good information on the site. And at the same time, we do have our own education courses and all that good stuff that we're going to be rolling out here pretty soon. So I'm almost done wrapping up our education courses, which is going to be one of the better ones, or if not the best one out there. All right, believe it or not, check it out. So let's go ahead and jump to the video here. I got a lot of good stuff I want to show you guys today. I was not able to do a weekend review video, so I'm going to go over a couple of things I wanted to touch base on today and here in today's video. And we also have a lot of good things going on right now that we predicted that was going to happen, and it's playing out. So whenever you predict something, all right, and you stamp your call on it, and it happens, of course, you got to show it again just so you can emphasize the fact that you were spot on. And we're going to do that here today before we get into some of our normal, some of our little standard routine analysis, which is the SPY indices and all that stuff there. So let's go ahead and talk about the Treasury bonds, guys. If you guys recall, 2 weeks ago, if I'm not mistaken, 2 weeks ago, 2.5 weeks ago, we talked about the bonds forming a head and shoulders pattern on the daily chart, on the weekly chart, I mean. And we talked about, I talked about one way that you can participate and make some nice coin on that trade idea, the rotation of bonds, money coming out of bonds and either resting on the sidelines right now until we get a correction, or money coming out of bonds, and some of it going into stocks right now, and some of it being placed on the sidelines, as some people are expecting a price correction. And right now we're getting that volatility that gets investors a little bit shaky. So therefore, some people like to take money off the table. So let's go ahead and take a look at the TLT. What you have here is a weekly chart. You have the weekly chart that formed this nice head and shoulders pattern that you're seeing right now, with the neckline being somewhere around the 112, 111.75 area. Right now, the real breakdown of the bonds are going to come when we break the neckline. But at this point in time, you can see we broke the nice little upward slope channel. We have 3 confirmation closes, and I wouldn't be surprised if we get another 3rd confirmation close. And we also broke the pivot that we made back here in March. All right, and now the next target is going to be down here towards that neckline and down here towards that 200-day moving average around 110.24. So again, if money's coming out of the bonds, it should be going into the equity markets, of course. I mean, Standard Finance 101, or at least right now, it's going to be sitting on, Standard Finance Investing 101. But right now, it's going to be sitting on the sidelines if people are expecting a correction. But if that correction comes, and when it's over, you can expect some of this money that we're seeing coming out of bonds go into the equity markets. All right, if you take a look at the monthly chart's breaking this nice little short-term uptrend from this little expansion candle that I used for this right here to this right here. So it doesn't look good. We had this nice little base that was around 118. We broke out. We got the bulls excited when we thought we was going to get a correction in the markets. That failed, and we have this ugly engulfing candlestick right here that's most likely going to hold for the month. So we have to pay attention to that. Now, if you take a look at the daily chart here, all right, you can see we broke below this little price congestion band that I have right here from all this action that took place right here to the fake breakout, to the fake pull in. A lot of trades and price action happened between this 115.54 and 117.72. Therefore, the fact that we're below it, the least path of resistance is now to the downside. All right, it's not to the top side here, because now we have all this resistance to try to battle through. So keep an interest. Keep your eye on the bonds. All right, they do look like they're going to make another continued move lower. You can see that the volume is definitely starting to pick up. And if you take a look at the inverse ETF that I gave you guys a heads up to buy, which was down here at 54, somewhere in this little area right here, you can see it's now at 64 with this nice volume spike. And this ETF has been dead for a while, of course, since they've been buying the bonds. But if you take a look at the weekly chart here and the monthly chart, you can see that this thing's ready to get some go-go juice, I guess you could say. So keep an eye on this thing if it makes a move over 63. All right, and we're watching the bonds at TLT to see if it makes a break below 110. We could see a big shift out of bonds and into cash or into some of these equities that are at discount prices. Obviously, people that are buying bonds, I mean, selling their bonds, they're not going to be buying these equities prices up here. They're going to probably wait for a correction or try to like slowly start to, dabbling into some of these names that are looking good. So that's just the analysis that I wanted to bring to you guys to show you guys how we were spot on with the bonds. And we are also spot on with a lot of stuff that we call out intraday. So you want to make sure you go check out that chat room, mywallstreettv.com. All right, so let's get back to the basics here. Hope you guys had a great Memorial Day weekend. Hope you guys were able to spend time with your family and friends and to say thanks to those that served in the military. I actually helped my old man move some stuff around the garage. He was in the military for 24 years, so I said thank you to him. E8, Master Sergeant, Airborne Paratrooper, all that good stuff. So hope you guys are ready to get back to the business because I think we're going to have a lot of volatility here in the short term picking up, and it's going to provide for some great trading opportunities. So let's go ahead and get into it here. All right, so starting off with the SPY. The SPY closed up 99 cents here, closing at 166.30. All right, and this happened. We had a big gap up overnight, so then when we came into the morning session, the ES pushed up. The ES pushed up about 6 points, and we just started reversing from like around 10:30, a key reversal time, all the way down to like, we started all the way down to 2 o'clock, and then around 2:30 is when we actually had to try to get a nice. The markets try to do a nice little bounce, but they were not able to bounce at all. They actually closed back near the lows, but we still ended up positive. So again, as CNBC would say, this is the 20th consecutive Tuesday that we were up. All right, we've been closing up on Tuesdays for the past 20 sessions. Not sure when that's going to stop, and not even sure that not even sure that statistics even relevant. I mean, relevant to the fact that we're closing higher, but not relevant to the fact that it doesn't mean anything if we're trading the markets on a day-to-day basis. So who cares if we're up for 20 days in a row? So now let's go ahead and take a look at the SPY. The level of support you want to watch is down here at 163.91. We're having trouble breaking past this key area, which comes from that trend line that I showed you guys before. If you guys want to know what trend line that is, just go to the previous after the bell market summary. You can see me explain it there. And then we have this resistance around this 168 area. We broke the accelerated trend line, which you can see right here, and we had trouble breaking back over it. So right now, short-term resistance is 168, and then the high that we made last week, Wednesday, which is 169, and then short-term support is right down there at 164. All right, if we continue to trade sideways a bit here and we don't get any upward traction and we hold below 168, you want to be looking for this be looking for the SPY to make a move back to the downside and kind of recheck this area to kind of check the buyers down there possibly. So be on the lookout for that. If we take a look at the ES, which is something I look at as well, as we track the ES intraday to trade our stocks and to just track the market in general, because some of the guys in the room trade the ES as well, you can see that we've been having a lot of volatility pick up here in the past couple of days. All right, just look at this crazy price action. So be very careful. Make sure you're managing your risk accordingly. All right, so now let's go and take a look at the triple Qs, which is the NASDAQ 100, which was up 48 cents. The NASDAQ still holding up pretty decent. This one's going to have some nice support down here around 72.80. Some resistance around the 74.50 area, then around the 75. All right, remember, a key trend line that we could come back and back test if the markets were to get a correction will be back down here towards this trend line that we broke out of right here. And that was acting as price resistance before. Remember, most trend lines usually get back tested, or they don't get officially back tested. They usually come back down towards that area, make a little high pivot low in front of it, or a lower pivot high if it's in a downward bearish pattern or something, and then usually continue direction if the order flow is going to continue that way. So we're going to be looking for first of all, a possible pullback if we get this selling pressure that we had today. We're going to be looking for a pullback back down towards the 72.80. At the same time, we're going to keep an eye on this 75 level up here. All right, now if we take a look at the IWM was up $1.27 today. This is the Russell 2000. Now this one formed like a little crazy doji candlestick here. All right, we do have some nice support at these lower levels. At the same time, we are still above a rising 20-day moving average, as most of the other indices are. And the Dow Jones, the Dow Jones made a new record high today, so go figure. In any case, This level you want to watch down here is around the 96.50 level, short-term resistance around 100. Again, you can see the volatility is starting to pick up a bit here, so just be mindful of your risk and make sure you know the key levels to work off of. If we pull back in the short term, you want to watch this 98 level, which was this 2-day resistance right here, which should act as support, at least for an intraday scalp. And then if we get some more selling pressure, we could break through that and come back and check these levels. If we break to the top side, again, watch the 100 level, and then the high that we made last week, Wednesday, which was 138 cents. Okay. Let's see here. Now let's take a look at the currency, because the currency action is definitely warming up a bit as the U.S. dollar continues to hold this nice bid above 83.50. And if we break out this range, we can expect the dollar to make a nice measured move higher from this little move that we have right here. So keep an eye on the dollar, which is looking strong. And then, of course, the euro USD, which is looking weak. All right, the euro looks like it's getting ready to break down. You can see the nice little pattern that we had here. We had an official back test of the 130 level. Mind, excuse me with all these lines I have here, but you guys get the big picture. Actually, let me take off some of these lines here. Let's take off the studies real quick so you guys can see a clearer chart. But we have the official back test that we got on Friday of the 130 level. That actually held. So now, if we break this 128 level, that's definitely going to cause some selling pressure. That's going to be the breakdown. The back test held, like I said, and a break to below today's lows gives us a target of 128. And the reason why I'm tracking this currency action, because I believe the currency action is definitely something to keep an eye on right now, as we have a lot of intervening going on in the markets with this currency, and that's definitely going to cause for some volatility in the equity markets and some of these other asset classes, which is basically going to start getting some money to move around and give us some volatility. So keep an eye on that euro dollar. All right, I'm expecting this thing to break down. All right, as I already showed you guys, the head and shoulders pattern that we have on the euro dollar weekly chart right here. Your left shoulder, your little trap head pattern right there. Your right shoulder, your neck lines down here at 127. So, we're tracking the currency with the bonds and the equity market so we can make sure our subscribers are on the right side of the field. Hell, if I was a money manager, which I am not an investment advisor or money manager, which I have the skills to do so, I would have got my clients out of bonds, say 3 weeks ago, maybe even a little bit before that, just to be a little bit early to the party. But now on CNBC, you hear all these guys talking about rates going up and bonds, and now they're all rushing out the doors to try to dump some of these bonds. But anyways, we're going to be keeping a close eye on this currency action and this movement that's going around in the different asset classes. So let's take a look at gold, because gold has been doing absolutely nothing, which is why you do not want to be invested in gold right now. All right, could be at some bargain prices, but at the same time, it's not paying you any returns right now unless you're short. So gold, the key level to watch is this 131 area, 130 half area. And you can see we have this little big range right here around 130 and 142. All right, let's take a look at silver. I'm just going through the ETFs here, not going through the futures on these commodities here. Silver is still looking weak as well. Tried to get a bounce last week, but you can see it's still having trouble trying to break over this 22 level. Maybe if it gets over 22 with some traction, we can expect some upward action back up towards these 23.50s. But in the meantime, stay away from the silver. All right, and then let's take a look at those gold miners, which I usually like to take a look at after the GLD, but I've skipped over it. GDX, gold miners, again, want to stay away from gold. It's not doing anything right now. And we have this little low, this lower low, we have this lower highs. It's still in a downtrend, in other words. So stay away from the GDX, stay away from the gold miners. Last but not least, crude oil. I like the crude oil because the crude oil, every time the precious metals and type of safe haven commodities are down, crude oil and copper are usually up, and crude oil continues to hold above our key level that we have recognized is where some institutional buyers are coming in around the 92 area. And now we held a higher pivot against that 92.93. And if we break over 96, today's highs, we'll be looking for a move over 97. We break over 97, best believe we see that 98 and those higher price levels in crude oil, which of course is not going to be good for us going into the summertime, as a lot of our discretionary income that we like to spend on Starbucks and all the other good stuff is going to be going towards our fuel. So keep that in mind. Maybe some retailers might get hit by that, spending that they're not going to get if these gas prices start to rise up. All right, so crude oil's looking strong to me. Let's go ahead and go over a couple of stocks here. Again, technology still the sector that you want to be involved in. Microsoft gave you guys a Bible pullback last week. Still, making some nice price action here where it's going to, make a new high in the coming days here, it looks like. HPQ, a stock that showed some relative strength all last week in that volatility, forming a nice little tight pattern here, holding inside the upper 50% range, I would say, of this big expansion bar that we had on Thursday. Keeping on HPQ over 25 looks like money if it holds and this market doesn't do nothing crazy. IBM showed some relative strength today. I was not able to track it. I took my eyes off the market, after 12 o'clock or so because I'm finishing up our new revamped education course that you guys are going to want to take because it's going to be some good stuff. And IBM still holding up pretty decent. Remember, we're still working off of that little consolidation we had for the breakout. You can see it came back down, checked those levels, formed a nice little higher pivot off this little level right here, and now it's making its stair step way higher. So IBM looks good. Rotten apple in the whole tech sector is Apple. Apple Computers, was down $3.71 today, and doesn't look like it. Looks like it wants to pull back a bit. What I'm trying to say here. If Apple could break over 450, then we could get some traction up towards this 461 area. However, if it cannot, and we break this little kind of short-term trend line right here, we may be looking for a move back down towards 430, 420. Then if it breaks 420, that's not going to be good. It'll be making its move back down towards 390. I have a good friend of mine on Facebook, Jesse, if you're watching this video. He's into a lot of techs. He's into a lot of technology stuff, and he basically says that Apple's losing their competitive edge, based on all these other companies that are advancing more in the technology space with the cell phones and stuff like that. So, something to think about. A lot of my friends use Android, so keep that in mind. Apple is, really is losing some of its steam. I know all you diehard Apple fans out there are probably mad at me saying that, but it's the truth. Google's pulling back a bit. The way it's pulling back right now looks like if it breaks this 870 area, you can find a nice little quick move down towards 850 or so. However, this is a key area you want to watch, that 20-day moving average, 870. We hold that 870. Look for a move back in this little range right here. This is one of the other stocks that we have on our radar. All right, you saw some nice buying in the energy space here, ExxonMobil. All right, we gave ExxonMobil a buy back here when it broke past this key trend line from our little analysis, and then with that back test area that we told you guys was a good area to buy on the back test back down towards this 950. That back test held, and now you have it making its nice little stair step move higher, which again, this is some stuff we go over in our education course, which if you're interested in joining our firm or participating in our education course that we're going to be hosting sometime in June, I believe it is, if everything goes on schedule, you want to contact me at ccooper@wallstreettrading.com or go to our offices that we have in New York or Miami down here. I work in the Miami office, by the way. The banks are holding up pretty well. Citigroup was the strongest bank, one of the stronger banks today. Was up 2.5%, held its rising moving averages, and it's looking pretty good. Citigroup, JP Morgan was up 1.75% today. That's looking pretty good as well. Looks like it's going to try to, break past this 54.98 level. Why? Because I'm pretty sure some people are short with the stop versus that high. So they got to go check those levels, folks. Come on. What else? Again, the energy sector looks pretty good. Oxy, OXY, APC. All right, we're seeing some nice buying pressure in the natural gas stocks like CHK, which I gave out to the traders on the desk today, and they made some decent money in CHK. APC over 92 looks pretty good. Actually going to go ahead and set my alert right now as we speak. And last but not least, CHK, right, which looks to be set up to run up tomorrow and actually shaping up pretty good now to come recheck these highs as a target, 23. So that's about it, folks. We'll have some more stuff tomorrow in the room. Make sure you guys check out our Facebook page, wallstreettrading.com. Check out our website, Wall Street Trading, our Facebook page, Wall Street Trading, our website, wallstreettrading.com. And if you're interested in trading with our firm, contact me at ccooper@wallstreettrading.com. Have a great day, folks. Cheers.